Pensions are another particularly tax-efficient investment, in that you get tax relief on what you put in, largely tax-free growth in the fund, and tax-free cash when you take the money out. And the fund is outside your estate for inheritance tax purposes. The current annual allowance for making tax-relievable contributions is £40,000, so consideration should be made, where possible, to utilising the full allowance for the 2016-17 tax year by 5th of April this year. It may also be possible to carry forward any unused annual allowances from the previous 3 tax years. It's also worth noting that pension contributions of up to £3,600 gross per year can also be made by individuals with no taxable income. So the net contribution after tax relief is contributed at source by the revenue would actually just be £2,880. As was demonstrated by a recent report looking into the spending habits of consumers in the UK, most people underestimate how much they will need for a comfortable retirement. So I think the message is simply, the sooner people acknowledge this and start to save, the better. Capital gains tax is another tax that one needs to bear in mind in terms of exemptions that the government actually do give you. It's important to think about utilising your tax-free capital gains annual exemption, which is currently £11,100 and going up to £11,300 as of next tax year. Spouses, registered civil partners are each entitled to the exemption, so gifts between them prior to a sale of assets may well be tax effective. Similarly, with inheritance tax, there are useful exemptions that perhaps should be made use of. The use of and the carrying forward of the £3,000 annual exemption should be reviewed, together with other possible exemptions, such as those for small gifts of up to £250 per individual, regular gifts out of normal income, and tax-free gifts in consideration of marriage, and these range between £1,000 and £5,000, depending on the relationship with the person getting married. I think inheritance tax planning is certainly something worth thinking about. I think in the words, was it Roy Jenkins, who said that broadly inheritance tax is a voluntary levy paid by those who distrust their heirs more than they dislike the